Tesla play on Friday that went absolutely ballistic. We did take 170 calls over 2,000%, but wanted to focus in on here and show you guys how I found this trade, number one, and number two, how I stayed in this trade as long as I did with the position size that I had. So to get started, I chart these levels every morning. I provide my key levels in Moneyline Trading Discord. This is the 5-minute chart, or sorry, the 15-minute chart here on Tesla. So all of these candles represent a period of 15 minutes. And I like to put my key levels on here around 15-minute. I like to look at prior weeks, and if we don't have any levels in the prior weeks, I'll go back even further to try and find some key levels or areas of confluence that buyers and sellers like to step in at on the 15-minute chart. So these are the levels that I had going into the day on Tesla on Friday, January 27th. And here's what I saw. So in the morning, right, on the 945 candle, we put a candle in that basically came up and tagged our first level of the day, which is 165.31. We rejected that candle, right? So I was not interested in going long on Tesla until we got up over this level and confirmed. The next candle, we pushed over that level and closed underneath of it. The very next candle, we pushed over and closed over it. So this is where I started to get interested in Tesla longs when we closed that 10-15 candle. I did take a starter position here, and I looked at this next candle, watched this next candle form on the 15-minute chart. I did see it come down here. When it came back up and we hammer candled over a key level, 165.31, I added more contracts here, more 170 calls here on Tesla. Now you might ask, why did I choose 170 calls on Tesla? Well, it's pretty easy. Tesla does have a tendency to move pretty well, especially on a Friday lately. The whole market's been moving really well on a Friday. And I realized that my next key level was going to be 167.69, and the key level after that was going to be 170.94. Basically, what I thought was that if we got over this key level of 167.69, we would push to my next key level at 170.94, and therefore these contracts would be in the money and have a pretty nice premium spike on the underlying premium for those 170s. So again, to recap, added on the hammer candle here, the 15, added a starter size here, added more when we confirmed over that level with the hammer candle. The very next candle, we pushed up to my next key level. I scaled a few here because we did hit a key level, and I always tell everyone in our Discord and on the Twitter community, I don't sell typically until we get to that next key level, right? Just like I'm not going to buy a position in the middle of a level, I don't like to sell a position in the middle of a level. Buyers are going to take us to that next key level, and if sellers step in, they'll take us right back down to the key level to the downside, right? So here, I did scale some at this next key level of 167.69. Held the remainder of my position right through to the next level. When we popped over that next level, we on the 10:30 candle, we confirmed over that 167.69, and I knew that we'd have a good chance at getting these 170s in the money. We went to a high on this candle of 169.94 on the 11:30 candle, and the very next candle we rocketed past 170 all the way up into the 171 area, right? We hit 173.44. So basically we went in the money. The plan worked exactly how I thought it was going to. So on this candle, I did scale some more because we did get over our key level. So I scaled a little bit more here, and I left my runner position run the rest of the day, looking for that next profit target up here of 175.23, which on this 12 o'clock candle, we came very close, 174.99. So we were 24 pennies off from that. And then 30 minutes later, we did hit that target, right, of 175.23, pushed all the way up close to our next target, that upper band of 179.39. We pulled back down and we got another hammer candle here, which is why I stayed in this position, because it was bullish momentum, right? If you still look at this chart pattern, we still are putting in higher highs and higher lows, right? We haven't shifted from that deviation yet. So higher highs, higher lows, also getting a hammer candle with the wick over our key level at 175.23. Then we pushed all the way up to our next level at 179.39, ultimately hitting a high here of 180.45. And this is where I sold my last contract for over 2,000% on Tesla 170s. I hope this video helped you guys understand how I got into the trade here on the 15-minute chart, how I had the confirmation and confluence to stay in this trade around these key levels. And if you like this video, feel free to check out the link below. It has our Discord in there. We teach things like this daily, and would love to have you come in and live trade with us. So let me know if you found this video helpful, and let's get after it next week. Thanks, guys.